Welcome, everybody. Thank you for joining us today for Down Payment Program Basics. The goal today is just to have a broad conversation about what down payment assistance is, what home buyer programs are, and just shore up the basic education about DPA programs, how to talk about them, how to help home buyers with them, how to recognize opportunities, and really how to understand the various benefits and requirements and nuances of down payment loans and grants, tax credits, and other various homebuyer programs. And really, we're going to look at the three main types of homebuyer assistance that we at Down Payment Resource are tracking across the country and working with many of your MLS and realtor associations to integrate this information into your listing system so you can educate yourself and learn more about what's available in your market, but also start talking more confidently and frequently with prospective first-time home buyers and clients about these programs and the opportunities that they present. So that said, we are recording this webinar. We will send a follow-up afterwards. I want to actually start with a poll. So I'm going to put this up on the screen here. Tell us how often you work with first-time home buyers. And you can just click your answer on the screen, and then we'll share the results and close out the poll. So go ahead and click your answer on the screen, and we'll give you a couple of seconds to do that. And again, tell us how often you work with first-time home buyers. Is that exclusively where your business comes from? Is it something that you just handle upon referral? And it looks like about 3/4 of you have voted. Go ahead and click your answer on the screen here. And the goal is to understand who our audience is so that we can make sure that as we go through this, we're speaking to maybe some of the awareness gaps or knowledge gaps that may exist, and speaking to your use case and your business and your pipeline. All right, so just about everybody has voted. Let's go ahead and close that and share the results. So over half of you said you frequently work with first-time home buyers. Over a third of you said occasionally. And there are some people on here that work exclusively with first-time home buyers. So this is good. This means most of you are working at least occasionally, if not as a core part of your business, with first-time home buyers. And we're going to even talk about what that means. What is a first-time home buyer? So that's good. Let me get that off the screen. Now let's dive in. What are we talking about here today? We are talking about down payment loans, grants. We are talking about tax credits and other home buyer programs that can help prospective buyers, those that are maybe you're in contact with, but they're not following up. They're not executing on shopping for a home, pre-qualifying with a lender. Maybe they're getting listings from you, but they're not communicative. And so maybe there are some underlying misperceptions about what it takes to finance a home, or maybe they don't think they can buy now. They think they've got to save up and buy later. So the goal today is to understand the programs and opportunities that are out there to help those prospects, those prospective buyers, get into a home sooner and become your client sooner. So with that, let's dive into who we are and what we do at Down Payment Resource. We track and monitor all of the homebuyer programs around the country. That includes everything from state housing finance agencies, and we'll look at who those programs come from in a moment. But there are over 2,500 programs nationwide that offer some kind of homebuyer help. And that's the goal today, is to break down what kinds of help are out there. But what's important is these programs are constantly changing. Their income limits, their purchase price guidelines, whether or not they have money. And they come from over 1,300 different entities, housing finance agencies, cities, counties, nonprofits. We'll see more about that in a moment. So the core of what we do for you at Down Payment Resource is track and monitor and keep up to date the information about these programs. In a given quarter, we might see 15 to 20,000 changes across this database to guidelines, links, contact info, benefits of these programs, funding status, and so forth. And you can kind of see on the right here, quarterly, we do this quarterly homeownership program index. We're adding and subtracting from the database based on new programs coming to market and those running out of money, changes being made to those programs. It's constantly changing, which means we're doing all the hard work of keeping track of these programs and presenting to you what's current and up to date so that you can go have confident, meaningful conversations about these opportunities. They are everywhere. These programs come from state housing finance agencies. There's one in every state, but there's not a market in the country that isn't covered by some number and some diverse array of homebuyer programs. Every state, city, county has something. Now, bigger markets, more people, more real estate, more dollars, more down payment programs, right? And 86% of these programs have money. Now that changes a little bit day to day, week to week, month to month, but on the average, 85 to 90% of these programs have money ready for a borrower at any given time. So the goal is to make not just you, but really to help you make potential or prospective buyers more aware of these programs so that they can more seriously explore home ownership and do so sooner. Now, here's what we're going to kind of break down today. What are the most common types of homebuyer assistance and what do they look like? So 70% of what we track in our database are programs for down payment or closing cost assistance. That means some of them are grants, some of them are second mortgages, some of them are DPAs that you combine with a first mortgage that comes from the same nonprofit or housing finance agency. And then about 10% of our database are mortgage credit certificates. Those are tax credits, a completely different animal from a down payment program, but they provide a unique benefit, and there are many of them around the country. And then the last component we're going to talk about is about another 10% of our database, which are the affordable first mortgages that typically come from a state or a local housing finance agency. And they offer some unique benefits that may not be available elsewhere. So that's kind of the core. We do track some other types of programs, employer assisted housing programs. Those are typically a form of down payment assistance, and we'll talk about those, and some other less common homebuyer assistance programs. But today's goal is to break down the three main categories here of homebuyer assistance: down payment programs, mortgage credit certificates, and affordable first mortgages. Now, as we go, we mentioned that these programs exist in every market. Every state has a state housing finance agency, but there are cities and counties and nonprofits and employers and housing authorities and land trusts and foundations and all manner of other entities that offer various homebuyer assistance programs. That's who those 2,500 programs around the country come from. And everybody's got different funding sources. Their programs have different nuances and so forth. So we're going to kind of talk through some of that and get a big picture for how some of those features work, what the benefits to the buyer are, and so forth. In terms of common requirements, across all of these, there are some basic common buyer requirements. One is that these are only for owner-occupant buyers, people buying their primary residence. These programs are not for buying investment properties. They're not for buying second homes or vacation homes. These programs are for people who intend to purchase the residence that they want to live in. Additionally, most of these programs do still have some minimum buyer investment, so a minimum down payment or buyer contribution, in addition to an investment of their time in home buyer education. Many or most of these programs also stipulate that the buyer has to go through a home buyer education course. We'll talk a little bit more about that later. And of course, for any down payment program, it's a down payment on a home that you're getting a mortgage to finance. So of course, they must still qualify for a first mortgage as well. Those requirements are just high-level, basic, overarching requirements across all of the programs and topics we're going to cover. In terms of the homes that these programs are available to, if you think about this from two different perspectives, a down payment assistance program is available to a qualified buyer, so they're qualified for a first mortgage as well as the down payment program. But there are some property characteristics that are important as well, namely location and purchase price. So the location defines which programs are even available to a buyer who's interested in that specific property. And then the purchase price, every down payment assistance program, most of them at least, have maximum purchase price limits. They are designed to serve the first-time homebuyer affordable median markets, right? These are not for buying $2 million penthouse condos. These are for buying your first home or a median priced home. So that means that the most of the programs have a maximum purchase price beyond which the program is not available. So the implication there is that location and price also matter, not just the buyer or the borrower or the household characteristics. So we did a study a couple of years ago with what was then called Realty Track, and we found that 87% of American homes, not just listed properties, but 87% of the homes across the U.S. in counties with a population over, I think it was 100,000, 87% of those homes were eligible for some number of homebuyer assistance programs in their market, which is a staggering number. Now, obviously, prices have been on the rise for a couple of years and other market dynamics may impact that, but we still find every time we do a study like this that a surprising number or a surprising uh, uh, share of the local inventory is always eligible for these opportunities given the location of the home and the programs available and the price limits on those programs versus the prices of those homes. So, that in mind, let's look at, or all of that in mind, rather. That was sort of our intro. Now, what we really want to do is break down the three most common home ownership programs or home buyer assistance programs. First, we're going to look at down payment and closing cost help. The most nuances exist there, and that's also the largest category of home buyer assistance. We'll follow that up by looking at affordable first mortgages, and then we'll look at these tax credits, the mortgage credit certificates. So let's dive into down payment and closing cost help first. And by the way, as we go, feel free to use the chat box, enter your questions. We're going to carve out some time at the end here to answer any questions that you have, but don't be shy. Let's be collaborative and let us know what your questions are. Now, as we get into down payment programs, I want to ask another question. I'm going to put another poll on the screen. How much money do you spend annually marketing to first-time homebuyers, trying to reach them, trying to engage with them, and so forth? Again, click your answer on the screen, just like the last poll, and let us know what's your annual spend on trying to tap into the first-time homebuyer market, to reach them, to get content in front of them, to engage with them, and so forth. And again, so we can kind of understand, maybe even compared to how this played out when we asked how you work or how often you work with first-time homebuyers. A big component of that is how much you spend trying to reach them, right? So click your answer on the screen. About 2/3 of you have voted. I'll give you another couple seconds, and then we'll look at the results and share them. All right, let's go ahead and close this out. Looks like just about everybody has made their selection here. All right, so I'll share the results. Now, this skew is a little different from what we saw up front, right? So we saw up front that 4% of you were working exclusively with first-time homebuyers. We would expect that you'd be spending more, and it looks like that sort of plays out here to reach first-time homebuyers. Now, what's in the middle, 36 and 17%, not a lot of money trying to reach first-time homebuyers, but you don't have to, right? And you don't have to spend a ton of money, at least, if you've got other creative ways like social media, good email marketing, good prospecting and follow-up practices, and good content, good information. Because what we keep hearing about, the younger up-and-coming next generation of buyers is this idea of self-education. They're doing a lot of research. They're coming hopefully more informed. Now, I'll let you guys be the judge of that individually as per your own pipeline and your own experience. But in terms of self-education and trying to get the right information and content in front of the next wave of buyers, we think it's important to understand that sometimes the need arises or the opportunity arises to spend money to reach more people or to reach the target audience. What we want to give you, or what we want to arm you with, is information and content that can prove so invaluable to first-time homebuyers or prospective buyers that if you've got a connection to them, you don't need to spend money to reach them. You need to give them the information they need to reach back out to you. So hopefully that makes sense. Let's see. Let me move on here to down payment programs. So we're going to dive into down payment and closing cost programs. That's a very sort of umbrella term. So let's dive into kind of what that means and what that includes. First of all, that's the most common type of homebuyer program, just that catch-all term for down payment assistance. And that can mean a lot of things. Many of these programs are funded by the federal government, state government, or nonprofits. Some of them are employer-assisted housing programs. So essentially, the employer is using down payment assistance for their employees or prospective employees as a way to recruit or even retain talent. And the benefits can range from a couple thousand to literally tens of thousands of dollars. In some higher cost markets, we see even more than that from a single down payment program. But they're not all the same. And that's what we want to do here is get into the weeds a little bit about some of the nuances and the differences. Some of these are grants. That is a true gift. A grant is essentially a true gift forgiven at closing. There is no second lien or second mortgage. It doesn't have to be repaid. It's a gift at closing, meant to cover down payment and closing costs. But not every down payment program is a grant. Probably more of them are repayable second mortgage programs. That means whether starting up front, they have to be repaid either over time or maybe when you sell the home. Now, you might think, well, if you have to repay it, how does that increase your purchasing power? Well, some of these are zero interest or even no interest. Some of them just get repaid when the home is sold. So the home is occupied for some number of years. Presumably you appreciate in value, and then when you sell the home, you pay off the down payment program, but you've paid your mortgage down over that time and you've appreciated in value over that time. So there's still a big gain, and you're just repaying the original assistance. Some of them, however, defer payments, maybe even for the life of that loan, or it's what's called a silent second, which means you don't have to pay during the life of the loan and again repay at the end. But what gets interesting is a lot of these are forgivable, or they have what's called an affordability period over which the original down payment assistance amount is forgiven. That debt is forgiven, meaning wiped out, if you stay in the home as an owner occupant. Now, that term can range from 3 to 5 to 7 to maybe 10 years, sometimes longer, but that's kind of the normal range. So, what's the average tenure of a first-time home buyer in their first home? Well, those numbers have been skewed a little bit over the last 10 or 15 years because of the economic downturn and the impact that had on people staying in their homes longer. But if you're in your home for 5 years and the down payment assistance is provided up front, maybe you owe it back if you move 3 years later, but sometimes part of that debt is forgiven, usually in equal increments over some number of years. So think 20% per year over 5 years. The point of that is not to get into the minutia of some of these down payment program criteria and repayment terms. The point is the benefits vary. The long-term implications vary, whether or not a program has to be repaid or payments are deferred or whether or not it's interest bearing or if it's forgivable. But all of them offer help for a buyer right now up front to get into a home. And that's kind of the bigger picture point that we want to drive home is they're all different and we're going to explore that. But every one of them offers down payment and or closing cost help to get a buyer into a home now. In terms of what those programs can be used for, obviously down payment, often closing costs. Sometimes that can include covering some of the prepaid expenses. There are some programs out there that allow for repair or rehabilitation of a property. So if a property needs some repairs, accessibility improvements for disabled homeowners, or improvements to bring the property up to sort of market specifications. Sometimes there are programs that allow some of those funds to be used for property repair or rehabilitation. If you've got the seller paying a lot of closing costs, this just becomes a principal reduction, right? So a lot of opportunities, but those are the basics in terms of what these programs are used for. And then we keep saying first-time home buyers, and I've asked you several questions about first-time home buyers, but I do want to be clear about what that means. And a lot of people might have a different definition when you think of Fannie, Freddie, HUD, IRS. Generally speaking, they're all consistent on one thing. A first-time home buyer is basically someone who hasn't owned a home in the last 3 years. Now, there are exceptions to that, and depending on the source of the definition, there may be some different language about that. But essentially, a first-time home buyer is someone who just hasn't owned a home in the last 3 years, or maybe hasn't owned a primary residence in the last 3 years. There's exceptions for displaced homemakers and so forth, but that means that for a lot of these programs, the eligible buyer audience includes first-time home buyers, of course, but it also can include repeat buyers who maybe owned a home, 4, 5, 6, 7 years ago, for some reason had to rent for a while, maybe repair credit, but they're ready to get back into home ownership, which would be the third class, boomerang buyers. So that expands the audience to whom you might be looking to educate. And it also clarifies that first time homebuyer is maybe not necessarily as restrictive as it's sometimes misperceived to be. You may have owned a home, sold it 4 or 5 years ago, rented for some reason, job transfer. You're a first time homebuyer again by most people's definition. And it's also important to remember that not every down payment program, in fact, many of them don't have a first time homebuyer requirement. Over a third of the programs we track don't even have a first time homebuyer requirement, meaning they're automatically open to repeat or even current owners. So, down payment terms. These are just some of the things we kind of hinted at earlier. Is it a grant? That means it's forgiven at closing. It's a true gift. There is no second mortgage. Repayment is not an issue. If it does have to be repaid, it may be called a second lien. Sometimes these can be third and fourth liens. They can be layered in some cases. That's a common question we get. Can you use more than one down payment assistance program? Well, the answer is yes. It does depend on which programs you're thinking of using, but there are certainly plenty of opportunities to layer additional or multiple down payment programs. Some of them are forgivable, meaning if you stay in the home, the down payment debt that you may have incurred or the lien that you incurred gets forgiven over time. Some of them may defer payments. That has implications on how income is calculated for qualifying purposes. The affordability period is essentially how long you have to stay in the home if it is forgiven over time. And some of them incur shared equity features, meaning if the down payment program provides 5% of your down payment up front, then the down payment provider may defer payments, but when you sell the home, they want their 5% back plus a piece of the equity or something like that. So again, glossing over what can become some pretty complicated terms, but the point here is let's just understand some of the basic nuances and the terms that you might hear when talking about these programs so that you can confidently approach home buyers and understand the basics when you see a couple of different down payment options and you want to bring that topic up with them. Now, in terms of eligibility for a down payment program, there are income limits for most of these programs. Just as we talked about earlier with sales price limits, the target audience here is the median market and below. First-time home buyers, low to moderate income, but income limits we've seen approach well beyond the median incomes in the market. So 120, 140% of area median income. That's pretty healthy. And especially when you're talking about reaching those that really need access to affordable housing and affordable lending solutions. Just as with income limits, we talked earlier about sales price limits. Most of these programs do put a cap on the price of the home that can be purchased in order to use one of these programs, because again, we're trying to keep homeownership affordable for the entry-level buyer. Property location, we talked about that as well as part of that study that showed overwhelming eligibility around the country. The location matters because that's what determines which programs are even on the table. And then you start looking at sales price limits, income limits, the borrower's qualifications or the buyer's qualification as well. Credit scores, those matter. The floor is generally 620, 640, somewhere in that range. That's where these programs start to become available in terms of FICO. Home ownership history obviously matters. We talked about the definition of a first-time home buyer, but past home ownership is not a disqualifier for many of these programs. And then military service, that's an important one to bring up because by virtue of military service, many programs actually waive the first-time homebuyer requirement if they have such a requirement for the general population. So if down payment program A has a first-time homebuyer requirement for generally anybody coming to them, but they're working with a veteran and maybe that veteran currently owns or recently owned a home, that veteran may still qualify for that same program despite the fact that they are not a first-time homebuyer. So that's important to remember because it opens the door to yet more programs for veterans who maybe have to move frequently and they have a financial interest or an interest in purchasing a home as they move or as they're transferred and so forth. This opens the door for them to be able to access some of these down payment programs despite previous or recent home ownership. Now, what are the advantages of these programs? So again, we're not trying to get into the sort of the financial minutia here, but to understand the impact that these can have, and further than that, to understand how these programs can bubble up prospects to become buyers sooner, and how these programs can bring forward people that were maybe just looky-loos on your website, filled out a contact form, but don't really engage when you send them content. These are the kinds of benefits to understand, the advantages of these programs that you can engage those prospects with to try to help them speed up their homeownership decisions and aspirations. So when you add a bigger down payment, you lower the loan to value. So if a buyer wants to buy a $200,000 home and they have $5,000, that's not enough for an FHA down payment, for example. But if they can get a $10,000 down payment program to help, that just significantly lowered their LTV and potentially helps them cover some of the cash to close. Another thing that does is debt to income. That's a big deal when your clients go try to pre-qualify or qualify for a mortgage. Their debt to income is going to become a critical factor. How much debt do you have? How much income do you have? How much debt would you incur with this new home? Now, home ownership in so many markets is still drastically more affordable than renting. But when you can add a down payment program, if that's contributing to additional down payment, then you're also lowering the debt to income because the loan amount is lower. So what else can these programs do? Obviously, supplement cash to close, lower the monthly payments as you lower the the mortgage amount, and they increase purchasing power, lowering DTI, supplementing cash to close, lowering monthly payments. All of those things increase the purchasing power of that same household's income. Now, homebuyer education, we mentioned this earlier. It is often required for most of these down payment programs. Typically, that education has to come from a HUD certified homebuyer education provider or online, often HUD certified homebuyer education provider. There are increasingly more online options, and more we see the providers of these down payment programs adopting online options or approving online options to help buyers do the course faster, to expedite the process for them so they don't have to wait for a weekend class. They can do it online at their leisure, but at their discretion, and get it done sooner. What does this do? Honestly, we're big supporters here at Down Payment Resource of homebuyer education because it is preparing buyers to be successful owners. They're not just learning about the home buying process. Most of these courses include content about the home buying process, how to find your home, how to write a contract, what to expect on the mortgage side, and so forth. But many of these courses also include information about how to be a successful long-term owner, what to expect when you move in, how to budget for the things that will inevitably break or go bad. So for those reasons and more, we're big proponents of homebuyer education, and we're bringing it up because it is also largely required for most of these programs. But our take is, if we're providing education to these people, to these buyers, that's going to enable them to move more seamlessly with your help through the real estate transaction and the mortgage process. And we're also preparing them to be successful long-term owners in terms of budgeting, expectations, taking ownership in and care of the home that they purchase, growing their family, and so forth. Then we think that's a win-win for everybody. Now, that was down payment programs. So we're going to switch topics here for a moment. Before we do that, though, I want to ask one last question. Since we just finished the down payment program part, tell us, and you can click your answer on the screen, have you recently used a down payment assistance program with one of your clients? So have you worked with a buyer recently that themselves used a down payment program? Was that this month, this year? Has it been a while? Or have you never worked with a down payment program or with a client who used one? Half of you voted, and that's going up fast. Go ahead and click your answer on the screen here, and then we'll share the results. All right, so most of you have voted. I'll give you another couple of seconds here. Yeah, we'll share this. This has played out to be pretty interesting. So I'll go ahead and close this. It looks like the voting is petered off. So share the results. So here we go. So for those of you, here's what's interesting to me is Many of you are working occasionally or frequently or even exclusively with first-time homebuyers, but over half of you have never worked with a client who used a down payment assistance program. So, a couple of things. One, why not? Is it lack of awareness? And this isn't to throw shade or anything like that, but in all honesty, we want to make sure that all of the opportunities available to a consumer, to a prospective home buyer, are they're made aware of all of those opportunities. So, is it lack of awareness? Is it lack of understanding? Is it lack of a trusted lender partner that can help you shepherd these clients through that process? And maybe it's something else. What we want to do is hopefully out of this webinar give you a basic framework from which or with which you could approach clients and your lender partners, and we're going to talk about that later too, who your trusted partners are in this process. We want you to have a basic framework that tears down at least some of the fear or maybe some of the hesitancy to approach a home buyer with information about these programs. There are so many of them out there. They're all different. That can be cumbersome for sure, no doubt. But it's also so opportunistic, and it presents a unique opportunity to a home buyer who maybe is there. They've got the income, they've got good credit, they've taken good care of themselves financially, but maybe they're a recent graduate, or how hard is it in some markets, especially higher cost markets, to save up 5-10% for a down payment when you're working in teacher, nurse, police officer, right? And you're trying to save in a higher cost market? It's going to take years. But one of these programs can move them forward by years and bring to current their home ownership opportunity. So I don't want to digress here. Let's get that off the screen and let's look at affordable first mortgages. All right, so that was all down payment and closing cost help that we looked at before. The second most common type of homebuyer assistance are the mortgage options that are sometimes presented by usually state or local housing finance agencies that are coupled with down payment programs. So some of the basic features, and we're going to move through the mortgage part quickly because we want to talk to you about mortgage credit certificates, which are tax credits. But some of the features of these affordable first mortgages are sometimes reduced interest rates. It also expands the array of first mortgage options available to a potential buyer, especially if it can be combined with either down payment assistance or the tax benefit of a mortgage credit certificate. Now, that doesn't mean that all of these can be combined with either or both the DPAs or the mortgage credit certificates offered by any particular housing finance agency, but that's a common benefit, and it produces more options for that buyer to explore and more opportunities for you to engage with that buyer. The advantages of those mortgage options are obviously reduced buying costs. Below market interest rate, for example, reduces their buying and borrowing costs. Lower monthly payments are a consequence of that, and likewise increased purchasing power. Just as the DPA might lower the loan to value and lower the loan amount, that lowers monthly payments. Well, so too can a lower rate on a first mortgage, for example, or using a mortgage that opens up down payment assistance options, again, lowers the loan to value, lowers the debt to income, and offers more purchasing power at the same income for that same household. All right, now that was quick. Again, if you have any questions, type them into the chat box, but I want to make sure we cover mortgage credit certificates as well, and that we've got some tips and pointers and next steps for you, and then we'll do questions. So mortgage credit certificates are not at closing assistance like a down payment program or a closing cost grant and so forth. A mortgage credit certificate is a federal income tax credit. Now, it's important to make the distinction between a tax credit and a tax deduction. I'll simplify that and move on by just saying a tax credit is cash in pocket reduction of tax liability as opposed to reducing your taxable income, which is a deduction. So a tax credit is always more favorable to a tax filer than a deduction, and that's what these mortgage credit certificates are. In addition, it is an annual benefit and good for the life of that loan. So what essentially happens is up to a certain percentage of the mortgage interest that you pay, you can claim that mortgage interest as a tax credit. If you're familiar with the mortgage interest deduction, so long as it's around, it means you can take all the mortgage interest you paid and deduct it from your taxable income. I'm maybe oversimplifying here, but to get the point across, the first portion of the mortgage interest that you pay that can be claimed as a credit is a direct dollar for dollar credit and a bigger reduction of your tax liability. So, in terms of the benefits of these programs, they reduce your income tax liability, more so even than the standard mortgage interest deduction. And if you have a mortgage credit certificate, it would last through any legislation. It's tied to your mortgage, right? So that benefit would last if a mortgage interest deduction were to go away or whatever. I don't want to get into all that, but another thing the MCCs can do is sometimes some of the MCC mortgage credit certificate providers will allow you the lender to recalculate income by using the tax savings accrued at the end of the year to increase qualifying income. Now, not everyone does that, but it is one additional benefit of some of these MCCs. Additionally, some of them can be reissued if you refinance that mortgage. So recall that a mortgage credit certificate is tied to the first mortgage that it was issued with. Now, you would think if you refinanced, you would lose the benefit of that credit. Some mortgage credit certificates can be reissued to the new mortgage through a refinance. Now, there are obviously stipulations on that and so forth, but it enables someone to refinance if circumstances change or better rates arose, or they reach 20% LTV and want to refi to get rid of mortgage insurance or something like that. So being able to carry that benefit through a refinance is a big deal because it carries that tax benefit, that tax savings onto the next mortgage. Now, how does an MCC work? I've kind of glossed over it, but here's an example, and I'm not going to go line by line through all the numbers here, but essentially and normally up to 20, 25, 30%, sometimes more, 20 to 30% on average of the mortgage interest paid each year can be claimed as a tax credit. There are limits on that. The IRS caps the credit portion at $2,000. So if you paid $8,000 in interest, instead of just deducting all that from your taxable income, the first $2,000 gets to be a tax credit, cash in pocket, dollar for dollar reduction of tax liability. And then the remaining interest paid would be taken still as a mortgage interest deduction. So you still get the deduction benefit, but you get the added benefit of the upfront credit first. Now, I don't want to go any deeper into complicated math. Suffice it to say, a mortgage credit certificate provides long-term value every year to buyers who are qualified for them and who are made aware of those opportunities and are given the chance to take advantage of those opportunities. So that covers the three most common types of homebuyer assistance. I want to take a couple more minutes here to just walk you through some more kind of unique features and overarching benefits of these programs. And then we'll talk about a few next steps for you and then take questions. So in terms of unique features and benefits of all of these programs, there are plenty that do not have a first-time homebuyer requirement. Often that occurs in what's called targeted areas. Now, those may be areas of blight or high foreclosure rate, areas in need of revitalization, low to moderate income areas. There are a lot of different definitions or criteria around which targeted areas are carved out. Suffice it to say, there are often no first-time homebuyer requirements for a specific program in a targeted area, even if that program requires that the buyer be a first-time buyer outside of that target area. What you also often see in targeted areas are, and think, the core metropolitan parts of markets, right? That's where you're going to see a lot of these areas. More down payment money. In fact, the same program may offer more money in targeted areas, or other unique programs exist that offer more than some of the other programs in the market. You also typically see in targeted areas that there are higher income limits, opening the funnel wider to more people, right? And also higher purchase price limits, again, opening the funnel to more people. And of course, these are tied to specific locations. That could be defined by census tract, county boundaries even. It could be that large. And anything in the middle, right? Neighborhood, specific home, and so forth. Targeted professions. There are a lot of programs out there that are either unique to those who are employed in certain professions or offer unique or advantageous benefits to those employed in certain professions. Most commonly, teachers or educators, and that can be anything from K-12 Could include pre-K. There are some programs that might go all the way up to university, or there are universities that offer their own unique programs. That also includes law enforcement. And these definitions can be very broad with some of these programs. So law enforcement could be Department of Corrections, sheriffs, offices of the sheriff, or sheriff's department, police department, and so forth. Firefighters, first responders, healthcare workers, nurses, and often others employed in healthcare facilities. And I should go back to educators. That isn't always limited just to teachers. It can often be K-12 educational staff, faculty and staff, which opens the door again to a wider audience of those employed in the educational profession. And likewise for municipal employees, so city, county, government employees, and so forth. And what happens is often there are, well, I mentioned this earlier, there are kind of two paths here. Sometimes there are unique programs that are just for that target audience. They're not even available to the general public. You have to be employed in one of these professions, and they can offer unique and significant benefit to those that do. The goal here often is the live where you work mantra, enabling these core service providers to live closer to where they work, closer to where they serve, and to be able to afford to do so. And then there are many programs that may be available to the general public, but might waive the first-time homebuyer for targeted professions. What's maybe missing here are those with the military background. Consider that a profession, and we talked about some military benefits earlier. Sometimes there's more money, waiver of the first-time homebuyer requirement, and other unique benefits for those in these professions. So important to remember, if you're working with a teacher, a police officer, a firefighter, a nurse, remember that there may be certainly all of the regular programs available, but sometimes unique or additional opportunities specific to those in these professions. In terms of what we'll broadly categorize as those heroes, 13% of our database actually comprise programs for these target audiences. So those can be state and local programs. Often these are where we see employer-assisted housing or matching down payment programs. And you can see military is kind of the biggest audience here. There are so many programs around the country that are either unique to those with a military service history or offer unique benefits to those who have a military background. Lots of teacher programs, lots of police and fire and first responder programs, and still plenty of programs for those who work in medical professions or healthcare. So again, keep that in mind when you're working with somebody with a military background or a teacher or a police officer. Make sure you're exploring down payment programs because there are so many opportunities, including some specifically catered to those in those professions. Now, let's cap this off with military, veteran, military service. Most of the time, a program, well, I won't, that's maybe not fair. Often, those with the military background are not subject to the same first-time homebuyer requirement where it exists for the rest of the general population. Often, they can still be combined even with a VA loan. And here's one of the most common questions we get. Well, it's a VA loan. If they're using it for the first time and they're eligible, they don't need a down payment. Sure, that's correct. But if they are eligible for a program that can provide a grant or something similar for down payment or closing costs, which I'll come back to in a moment, isn't it a huge value add and maybe our obligation to make sure that that program is put forth to them so that they can lower their loan and maybe have some equity right off the bat, even if they're using a VA loan? So sure, they don't have to have a down payment, but who says they can't? And why not offer them that opportunity? Now, closing costs. So maybe they don't need a down payment. They still have to pay closing costs, right? Well, can they be more competitive when you're writing a contract on behalf of somebody that you're working with that's got a military background? If they don't have to ask the seller to pay some of the closing costs because they've got a closing cost grant or something like that they're coming to the table with, then they can be that many thousands of dollars more competitive on their offer. And they can say, look, I don't need you to pay closing costs. I've got that covered. And that's covered by a down payment or closing cost program. One example, the Penn Fed Foundation offers a Dream Makers grant. It's a 2-to-1 match. They'll match up to $5,000 of whatever they'll provide a match of up to $5,000 against whatever the veteran puts into the transaction. And it's a grant. It's forgiven at closing, and it can be used for down payment and closing costs. It's for veterans, active duty, and I believe still reserve and guard. So back to the point about they don't need a down payment. Sure, on a VA loan, if they're eligible for 100% LTV, they don't need a down payment. But why not offer it? It's there. Make it available and give them that value add of going into the home with equity or being more competitive, presenting offers or covering closing costs. All right, so a couple more things. Next steps for you. How do you access this info? Most of you on this call are with one of our MLS partners, so you already have access to all of this. If not, you can go to downpaymentresource.com. You can always search for programs there. But if you are with any of these MLSs, our system is integrated into your system. So when you're looking at listings, look for these buttons. If you see the $ with the check mark on it, that's us. That's Down Payment Resource. If it's on a listing, either on agent or client reports, then you and your clients can click that button, see what programs are available at that location, and you can begin to explore these options. I'll add to that, who are your trusted partners? Your lender partners, ask them about the programs they participate in, and then the program providers who offer these programs. And if you are a member of one of those MLS partners we put on the screen earlier, you also have access to Down Payment Connect. That is your lead gen tool. It's waiting for you. Click Down Payment Resource from your MLS dashboard, and your Down Payment Connect URL is waiting for you. It is a link that you can push out in your social media or online or email marketing to consumers to engage your audience and give them a way to search for the down payment programs available where they want to buy a home and connect back to you to continue that conversation. So it's a lead generation tool. It's not an upsell. You already have it if you are with one of our MLS partners. I'll go back to that screen here so you can see that again for a moment. And then that's a wrap. So I think we will go ahead and open up Q&A here. I will put our contact info on the screen. And we do encourage you, if you're curious to dig a little bit more into affordable housing, affordable lending, down payment programs, keep up to speed on news and trends and data and the content that we push out, you can go to downpaymentresource.com/reports. And we've got some monthly, quarterly, and annual reports there that we put out. Those may be of interest as well. So with that, thank you everybody for joining. And we're going to dive into Q&A here.